Hello everyone, Future here with some technical analysis on MINE, ticker MINE. I alerted earlier today on Twitter of a buy at 0.0185 today in the morning, and I wanted to make a video explaining the different signals that, when added together, turned me bullish and actually made me buy this. So first and foremost, I'm going to start with the 50-day simple moving average that I mentioned on Twitter. When I pull that up, we can see that in April 15, this SMA was tested to the downside. And yet it was met with rejection. What that means is sellers tried to push this down, but were met with nothing but buys. So this is an exhibition here of price rejection. We could also say, just based off of this, what happened here is that the 50-day SMA provides support for the stock. Okay, well, take that forward and you can see that the SMA was being tested in the past 2 days, and yet was met with what? Rejection one more time. Met with nothing but buys, and that's displayed here by the two long wicks to the downside. Crucial and very important is also that today, on a Friday, at that we closed above it. So this is just off of this candle read and close above the 50-day SMA. It's a somewhat of a setup for a bullish following the next day, which in this case would be Monday. Okay, so what else can we say about this? So this is signal number one. There are various things that are very bullish clues, as I always say, in the chart. So the first one was price rejection below the 50-day moving average. This was actually what made me look deeper. Okay, so the second signal was momentum divergence. So the way we're going to see that is with a stochastics oscillator. Okay, when we pull that up, and by the way, as far as the settings, these are default settings. If we want to know exactly what they are, let's take a look. The K signal comes in, you can see my settings here. It's a 5-3-2. Well, that's just the line width. The interval is 5, the slow interval 3. And the D stochastic has a K interval of 5, D of 5, and a slow of 3. That's it. But I didn't set this. This is just default. This is probably, if you guys pull this up, you'll probably be set to something very similar, if not the same setting. So momentum divergence, what does that mean? It means when we have an intermediate low and we make a lower low in price, and we do so with lower momentum, we have momentum divergence. Okay, you can see here this oscillator is not confirming a lower low, and so what's in display here is the dying of a downward trend in this case, because it is to the bottom. What does this mean? This means this is a buy signal. Okay, couple that with this price rejection above the simple moving average, and it's a recipe for the stock to go higher, and it certainly did. And that was the setup to buy. Okay, taking this knowledge and forecasting it forward, well, what do we have here? We have an intermediate low that was broken to the downside in the past 2 days. So we have a lower low in price, but we have a higher low in momentum yet again. Okay, so we have momentum divergence in display 2 times in this chart. So what do we have here in the past 2 days? We have a successful defense of the 50-day simple moving average. I could rephrase that as a failure of sellers to push the price lower. Okay, dying momentum to the downside, and a close above the 50-day moving average. Very bullish. Like I said, this was just enough for me to actually put money at stake, and because I believe this is going to go higher. That was signal number 2, momentum divergence. Signal number 3 is we have what is called here a tweezer bottom. Okay, what that means, and this is the strict definition of a tweezer bottom, is when the wicks of the candle or the extremes of the candles are equal. You can see this one is not quite, but it is good enough for me. Okay, this is a very short-term signal, but it is a reversal signal. Okay, you can see we have that in display in the past 2 days. So these two candles are screaming reversal. That was signal number 3. Signal number 4 is that the correction, this correction here, and this correction are related by Fibonacci 61.8%, which is our favorite Fibonacci retracement, right? So I'm going to show you that by pulling up Fibonacci extension tool, and you can see it yourself by starting your Fibonacci analysis from this top here to the low of the correction, project it forward onto the high of April 29, and you can see we tested exactly the 61.8% retracement. So what that is to say, in saying in other words, is this move down is 61.8% the length of this move. And so that holds even more bullish implications that I'm not going to get into because I still need more price action in order to confirm a certain Elliott wave pattern that is extremely bullish. So there is very large potential, but working in minimums, I do see at the very least, this stock to go to 2.5 cents. What that's going to allow us to do is, since we bought below 2, it's going to allow us to place a stop loss at break even. Remember, my number 1 rule is to protect principal. Profits come second. Okay, so just to recap, 4 signals that turned me bullish and actually made me issue a trade. First one is successful defense of the 50-day moving average. Signal 2, momentum divergence in stochastics. Signal 3, tweezer bottom, which displays rejection. And signal number 3 is that this correction here is 61.8% Fibonacci, the length of the previous correction. Okay, and I can guarantee you that's not a coincidence. There's probably a very bullish pattern happening here, which in the next few days we'll be able to confirm and may even signal to blue skies. So hope this helps. If you have any questions, hit me up on Twitter at FutureMeDead.